Welcome into This Week in Bitcoin, episode 94. My name is Chris LAS.com, JupiterBroadcasting.com. Whenever the price of Bitcoin has been down for a bit, Bitcoiners always start whispering about price suppression. And frankly, I think most of it's narrative, most of it's cope, so I don't even touch on it on the show. This week, though, we're going to prove something that, to me at least, is a little uncomfortable. Two things can be true at the same time. If you're paying attention to the news, you might see the name Jane Street going around, and I want to give you a complete picture of the implication here. And hopefully you walk away with a practical understanding of the situation. So Jane Street is a large, privately held quantitative trading firm and global liquidity provider based out of New York City. They have offices around the world, of course. And not so long ago, they got into the Bitcoin market in a very big, very important way with a very special client. But I'll come back to that in just a moment, because first, you should fully understand who we're dealing with here. Jane Street is like hiring an assassin or a ninja when you need somebody to go work in the markets for you, right? They're a special ops investor. They've got a bunch of proprietary in-house tech that they brag about, and they have access to money that nobody else has access to. And we've been getting little glimpses of this just over the last few months. And starting about 9 months ago, Bloomberg ran a piece about dark money pools, of which Jane Street most likely very heavily trades out of.
Wall Street's infamous dark pools, they are getting even darker. It's today's big take. These are private rooms booming by taking off exchange trading platforms and adding another layer of exclusivity. To talk about what's happening under the surface, Bloomberg finance reporter Catherine Doherty. I was stunned by the data that you presented in this story. How have these dark pools gotten so big? These are not brand names. This is not the Goldman Sachs or JP Morgans of the world, although Morgan Stanley is up there.
These are companies that are kind of off the books. Jane Street is an example of this. They trade heavily in off-exchange venues, alternative trading systems, over-the-counter systems. They're cited often when you do any kind of research on them as what's called a systematic internalizer. In other words, they are part of a big dark pool of money that these larger companies like a Goldman Sachs could tap and get access to. And then the firm executes orders on behalf of their clients off the exchanges, on their own order books, with their own buyers and sellers that they've set up privately with special deals. And they almost certainly route money in these dark pools because that's how they would move the funds around. All right, now why do I bring all this up? Because in July of 2025, Jane Street went from a quiet company that maybe you never heard of, was just silently making billions of dollars, to an international name and brand when they were barred entirely from the markets in India. And not only were they barred, but the regulators there froze $566 million from Jane Street.
India's market regulator is barring Jane Street from access to its local securities market. SEBI also plans to seize $570 million of what it calls unlawful gains from the U.S. trading firm after an investigation into derivatives trades that generated billions of dollars. Jane Street, in a statement, says they're disputing these findings.
They always do.
Let's get the details with senior reporter Abhishek Vishnoi. Abhishek, it's really about SEBI clamping down, having greater scrutiny over these foreign institutional investors.
All right, so stick with this for a second, because I want you to understand there's a pattern of behavior.
That's right, and this may possibly be the biggest, fine that SEBI has employed on a foreign entity like Jane Street. It may actually be the biggest fine if it materializes ever, for such kind of market manipulation, alleged market manipulation. Now, the ramifications are strong, especially for the derivatives market. I mean, if you look at India's derivatives to cash volume, it's more than 400 times. That kind of figure does not exist in the US, Germany, and many other developed markets. So
they got greedy, and they got caught messing around. Now, the reason why this comes back to Bitcoin is because of the news from earlier this week.
And Jane Street is facing a massive lawsuit that accuses the trading giant of using insider information to accelerate the 2022 collapse of Terra Luna. Todd Snyder, the administrator winding down Do Kwon's bankrupt Terraform Labs, alleges Jane Street front-ran the market panic. The lawsuit claims that just 10 minutes after Terraform quietly withdrew 150 million Terra USD from a liquidity pool, a wallet linked to Jane Street withdrew 85 million Terra USD before the public was informed. Snyder accuses the firm of rigging the market to pocket massive profits while everyday investors lost billions. Jane Street has fired back, calling the lawsuit a desperate and opportunistic attempt to extract money for a collapse that was ultimately caused by Terraform Labs' own multi-billion-dollar fraud.
It's a nice dig at the end, and probably technically accurate. They always are. It's always. It's never their fault. Yeah, the ghost of Terra Luna, the crash from 2022. This week, we find out that Jane Street was possibly doing insider trading around that collapse. It's a pretty serious accusation, and some of the things in there seem to be kind of plausible. So here's the rundown, just so you know. The suit claims that a Jane Street trader, a former Terraform intern, which I think that was the company, shared insider information in a private group chat named Bryce's Secret. That's what the name of the group chat was, like a signal chat named Bryce's Secret. And the suit alleges that they shared insider trading information in this secret chat. And that by doing so, Jane Street avoided more than $200 million in losses and was able to profit from the meltdown. And the order of operation is like this. Less than 10 minutes after Terraform folks did their own withdrawal, which had not been made public to anyone, they didn't announce it to anyone on the market, a crypto wallet that analysts have, although it hasn't been exactly confirmed, I believe, but analysts have linked to Jane Street. 10 minutes after Terraform made their move, that wallet linked to Jane Street withdrew $85 million worth of Terra USD, which that was from the same liquidity pool that Terraform had just pulled from. And it just completely collapsed that liquidity pool. And it really accelerated the depeg process that Terraform was already trying to patch. It had already begun. But the implosion was just wild after that. And it led to a massive $20 billion wipeout across the crypto industry and sent Bitcoin below $20,000. Now, it was always going to blow up, but I think Jane Street probably tossed some fuel on that fire. And that history lesson and their history lesson in India is worth keeping in mind. Let's talk about that special Bitcoin client of Jane Street's, because this is the other reason why you've heard the name a lot. Because one of their clients, where they deal in Bitcoin orders and trades, is for a little company called BlackRock. And Jane Street is the major market maker and authorized participant for the BlackRock IBIT ETF. Now, in this role, they help facilitate trading, they provide liquidity, and they also handle the share creation and redemption process. BlackRock doesn't even manage that aspect of it, and they're often dealing in cash. They're buying and selling Bitcoin, and then they're settling in cash. Sometimes they do in-kind transactions for Bitcoin as well, and other types of agreements. Now, I mention all of this because what is notable is the day this suit against Jane Street was made public from the bankruptcy administrators for Terraform, the 10 a.m. slam against Bitcoin stopped. Of course, it's 10 a.m. for me. It might be a different time for you, but we've commented before. People have been talking about it online. Since October, since that Binance stablecoin depeg, there has essentially been a 10 a.m. slam just about every day, especially when the market is thin in liquidity. And then the day that the Jane Street information went public, the 10 a.m. slam stopped for 2 days so far. Could resume. But no slam. And it seems odd that it would stop just because the suit went public. Because one, it's not like they're the only people out there playing market games. Let's not kid ourselves. Two, there's nothing illegal about a seller finding a buyer and a buyer finding a seller. There has to be a market for this trade to work. I'm not sure anything illegal is happening here. So I'm not sure why they would have to stop just because the suit went public. So it just doesn't make sense. But yet, here we are, right? The slam stops just after the suit goes public. So explain that one to me, people out there. Give me your best take on that, because I can't explain it. We're up like 7% since the suit went public. Riddle me that one, Batman. I find that to be absolutely fascinating. But the Jane Street stuff seems to be a history of basically getting in there and manipulating the market in a way that's probably legal, I imagine. I mean, maybe not entirely. I suppose the insider trading part isn't. That's probably where they have them. If that little secret chat can be proven, and if they can get access to that secret chat, if that stuff goes out, that could be real bad look for Jane Street, couldn't it? Because that's documented insider trading right there. So we'll see what happens. But they are very much involved with Bitcoin because they are facilitating all of the back-end buying, selling, and trading for BlackRock, who's one of the largest Bitcoin purchasers in the entire world right now. Well, if you've been listening to the show since probably, a little bit before the end of last year, you might recall that I've been saying if the AI pump fades, so will Bitcoin's price, at least for a little bit. Of course, I thought this might happen via like OpenAI blowing up or another version of DeepSeek coming out that just really reminds the market that the open source models will eventually eat everything. But it seems it's been agentic AI. Even simple things like Claude Cowork have completely spooked the market and have caused the AI monster to start eating its own funding tail. But what's wild about these supposedly professional, lifelong investors who speak with such authority and honestly with kind of a tone that speaks down to all of us who don't get it, right? They're so smart. Well, it turns out in the last 3 weeks, they've kind of been in a panic and have done one of the most 180 investment hedges in my lifetime. I just absolutely can't believe it. And we start with a piece from Bloomberg.
Wall Street is suddenly waking up to the fact that AI might impact a larger number of industries and faster than they had expected.
What this story is about is how AI disruption fear is leading to sell-offs in parts of the market outside technology.
All right, so they say stocks outside of technology. Chapter 1, the situation.
On Wall Street, rising fears about artificial intelligence and specifically where it will disrupt certain companies are sending shares of those companies tumbling.
Wall Street has done an about-face. Investors were concerned that AI was costing too much and might lead to a big bubble with untold harms. Now investors are concerned that AI is going to be so disruptive that it renders countless businesses obsolete. There's definitely been a spillover, starting with concerns about leak.
Did you catch that? That's the important part there. That's why I want to let that go. Did you catch it? They've gone from hedging. They're hedging that the whole AI bubble was going to blow up in everyone's face. Of course, Tom Lee and, Cathie Wood and those types aren't. But if you're not Tom Lee and you're not Cathie Wood, you've been hedging that this thing was going to blow up. And it kind of makes sense. It's crazy kind of spending. And now, since agentic work has come out, I'm not making this up, guys. It really is. This is it. This is how these people are buying and selling their long-term investments. Since Claude Cowork came out and OpenClaw and all that, they've decided that every industry is in trouble. And then, to add a little bit of an additional accelerant to all of this, Anthropic released a piece recently saying, yeah, COBOL, yeah, we got that. We can reproduce COBOL now. So you can fire all those old high-paid engineers. And of course, IBM stock dropped like it was the dot-com bubble again because of a press release from an AI company that has every incentive to make that claim.
It might lead to a big bubble with untold harms. Now investors are concerned that AI is going to be so disruptive that it renders countless businesses obsolete. There's definitely been a spillover, starting with concerns about legal services, SaaS companies heading into insurance firms, tax preparation services, financial services, each of these in reaction to incremental AI products. The market sell-off really started in early February when Anthropic introduced a plugin to an existing product, one that they did not even really do a formal announcement for.
So what we saw on February 10th, for example, was shares of wealth management companies sell off after Altruist, which is a little-known AI startup, came out with a new tax strategy tool.
This is really something. I mean, I know I keep harping on this, but these supposed big time investors, right? Supposed smart investors that are dumping on all of this. I just find that to be, I don't know, incredible. So here they are. It's coming for all our businesses, your accountants, your tax professionals. They're absolutely screwed. So Wall Street is hedging that software is doomed and tech stocks are doomed and AI is coming for everything. Not only is it not a bubble, but it's the biggest, I guess, revolution of all time. And it's going to cost, I guess, jobs. I guess your accountant's going to lose their job and your tax professional is going to lose their job. And it's going to be absolutely devastating. So they're de-investing in anything that's technology related. And this is the lump of labor fallacy. We do it all the time in all different kinds of aspects of the labor market. It assumes there's a fixed number of jobs. But history shows us that automation doesn't shrink the pie, it bakes a bigger pie. Demand for labor grows the economy. Or I should say, as the economy grows, it increases demand for labor, which then increases the size of the economy. Do you follow what I mean? So when you hire people, they do more work, which makes your company more productive, which makes you hire more people. Do you understand what I'm saying? So the fallacy here is that when we get automation and we can do things, that people lose their jobs. But the reality is probably going to be a lot more in the middle. The accountant is now going to have a team of agents working for it. And why do I say that? Because it's already happening to the podcaster. This episode has a couple of clips that were collected by an agent that uses the Perplexity model specifically to monitor trending news on Bitcoin in different types of outlets on the internet from different news outlets. And then it monitors all of that and issues me a report. If there's one I like, it downloads the clips and saves them automatically to a sync service for me. Saves me some time, which eventually will mean that when I am on the road, I will be able to maintain production of the show. Because it's the research and the clip production that takes hours, right? As long as I can keep reading and as long as this thing can keep clipping, then I can sit down and I can do a show. And if it can organize the show notes for me to some degree, and that's the other thing it does, is it creates a history with sources of everything that it's collected in a markdown document in that same directory. So all of the links, the sources, how it found it, the logic it used, and then additionally, if it had any errors or anything like that, it also documents in there. I set this up yesterday. I set it up in the afternoon after I got done recording the launch. And I don't even think it took me that long. I think I was done by like 4 or 5 p.m. You understand what I'm saying? It doesn't take my job away. It makes me better at my job. Because now, I wish I had done this. I wish I could have done this 6 months ago because I'm leaving next week. I'm going to be gone for 2 weeks. I hope to have a show, but this show is a massive amount of work. And I have to drive to Pasadena and back. That takes hours of time. That time I'm going to spend driving is usually the time I spend preparing this show. So like in the future, it's going to be really beneficial if I can automate more of that. And I'm not there yet, but I can see a path to where that's actually possible now. It doesn't take away my job. So you look it up. I think if you're interested in this at all, I think you'd really enjoy this read. Go look up The Lump of Labor Fallacy. Go give it a little googs. You can find some talks on YouTube. They're usually in the context of boomers staying in the marketplace for longer, but it's a similar theory. And that's what's at the core of all of the AI fear. And I just don't think it really holds up. I think you do have some, right? We used to have, God, they used to call them like tapper uppers or something like this. Maybe somebody can boost in if you remember the name. But before the Industrial Revolution, at a job site, when it was time to start working, there was actually an individual whose job it was to go around with a really big stick and tap people's windows. And when the alarm clock came out, they all lost their jobs. It's a real thing. I'm not sure if I'm getting the name right, but that is a real thing. And these things, they happen and we transition to other jobs. But the idea that all these are lost forever, it just doesn't really seem to be how history's played out. Because how could we have survived the Industrial Revolution and the invention of electricity and ended up with more net jobs? You're telling me AI is more disruptive to business than the Industrial Revolution? You're telling me AI is more disruptive to manufacturing and to accounting firms than electricity? I don't know about that. I don't think so, Chief. And somehow all of those things created more jobs and more economic opportunity. So to me, This seems like a buyer's market right now because it's clearly an overreaction. Everybody's freaking out. And they're also selling their Bitcoin, which is ridiculous. Because you know what would be great right now is a hedge with no counterparty risk. Seems like a great time to consider that. But these morons, they're still trading Bitcoin like it's a tech stock. I don't know when they're going to figure it out. Bitcoin doesn't have these kinds of risks inherently that they're scared about right now. Bitcoin doesn't have a board. Bitcoin doesn't have a CEO. Bitcoin doesn't have a market capture via complexity that allows them to milk customers. It's not how it works. There's no counterparty risk with Bitcoin. Unless you hold it in a dumb exchange. But they haven't gotten there yet. I don't think they have felt enough pain to get there yet. And so the idiots out there continue to just trade Bitcoin like a tech stock.
Bitcoin is off to a brutal start to the year and is now on track for its worst month since the crypto collapse back in June of 2022. This would be Bitcoin's fifth straight monthly decline, the longest losing streak in 8 years. So, big question, is this a healthy reset for crypto or the start of a deeper downturn? I've been wanting to talk with you about this for a long time because
who do you think it is?
About
Who's the expert?
Bitcoin.
Do you have a guess before I let it go? Who's the expert that the Big Money Show brings on to talk about Bitcoin?
What do you make of the slide here? Is this reset just a nice reset, or is there something more fundamental going on?
Well, I think if you just zoom out for a second, right? If it's not going to zero, Bitcoin's going to $1 million at some point in the future. And I don't think that most people think Bitcoin's going to zero. And maybe a decade ago, that was a question. Now people may say it could go down a lot, but it ain't going to go to zero. So I think that's first. The second thing is, I think Bitcoin really has two things that people look at. One is expected, is there's this kind of 4-year cycle that people have gotten used to. And so there's a halving, Bitcoin runs up for about 18 months, it peaks, and then it has these really nasty drawdowns. And the drawdowns in the past have been 85%. Wall Street is not used to that. Wall Street, remember, the global financial crisis was a 50% drawdown. And I always remind people, Bitcoin has had a 50% drawdown approximately every 18 months for the last decade.
Okay.
So these people are used to the volatility, but when you see these numbers compared to stocks, you're like, oh, it's down 50%. That's a lot. The bigger thing, though, is Bitcoin, more so than any market in the world, is a forward-looking market. And so if you go back to why did Bitcoin run all summer long in 2025? I believe it's because a lot of people thought inflation was coming because of the tariffs. And so they said, well, if inflation is coming, just like I thought in 2020 inflation was coming, I'm going to go and I'm going to buy Bitcoin. So Bitcoin ran up. In Q3 and Q4, we realized that inflation is not coming. And so now the two biggest risks in the U.S. economy, in my opinion, are deflation and the contracting liquidity globally. Those two things are a major headwind for asset prices. Bitcoin has been selling off for 5 months. Guess what's also been happening? Truflation's inflation metric has been selling off aggressively. So Truflation is a real-time alternative inflation metric. It uses 14 million data points from 40 different independent providers. It has, in my opinion, more accuracy than the BLS's CPI metric. And it went from 3% down to 0.6%. Now, what's interesting is Truflation has a 97% correlation with a 1-month lag to BLS. And so my expectation is the CPI number is going to fall off a cliff here over the next 90 days or so. And you're actually going to see inflation come down under 2%.
Okay.
And Bitcoin was the alarm system.
So
I think that's an interesting observation. That's why I let it play. I think what he's saying there is that the Bitcoin price decline has matched the Truflation inflation decline for the most part. I think that is mostly true. I don't think it's 100% true. And it's an interesting idea. And he says there's a 90-day lag. So if his theory is correct, we should see it show up in the official Cook numbers from the federal government. I don't know about that, but I think it's something I hadn't heard. That clip, though, is a little brutal, right? Because Bitcoin's up like 7%. So he says it's a brutal sell-off. Well, here we are. It's up 7%. It's up 7%. There's been a lot going on in this space. And I don't want to over-index on this, but I think I have to really demonstrate to you how much pressure, how much psychological warfare is almost going on right now. And there was the Citrini AI report. I'll just play a little bit of this clip that went out that really spooked people because it proposed a near future, like I think it was the year 2028, if I recall, where we are essentially in total economic collapse because of the AI industrial revolution. It was a hypothetical piece based on research, but it landed in the market, I guess because they're future forward looking, it landed in the market like a total bomb.
Well, tell us a bit more about that timeline here and what's the probability that this could actually come into fruition?
The timeline, we were seeking to just find a time period that is far enough away that ultimately we can start driving a conversation on what needs to be done to avoid such a timeline.
The great thing is, unfortunately, it's in the video, the absolute masterclass in shoulder shrugging he's doing when he's talking about this. Because I don't know if it comes across in his voice, but it's clear. It's like arbitrary day. I mean, like if when I say that, so if you say, I don't know, arbitrary day, and you shrug like the most emote kind of IDK kind of shrug, he's doing that multiple times during his answer. IDK, we just kind of picked a date that was sexy.
Is far enough away that ultimately we can start driving a conversation on what needs to be done to avoid such a timeline, but near enough that, would kind of shake people a little bit. And
they literally were trying to shake people. They warned people about a ghost GDP scenario of an absolute economic wipeout.
And ultimately, we do think it's going to take a while for this to diffuse through the entire economy, but it's more a question of, what happens at the leading edge. I think especially in the US, the job market is just very weak for white collar jobs already. And so the thinking and the ultimate fear is that it's not going to take that much to sort of push things over when we haven't really generated any white collar jobs in the US over the last 3 years, when they take out things like healthcare and education that are primarily driven by government spending.
Is that the fear? Or is the fear that we have spent 30 years creating BS do-nothing jobs that are basically adult daycare programs that have resulted in a bunch of entitled adults going around acting like grown-up children because they don't have serious jobs with serious responsibilities that could be replaced with an LLM? That's the only scenario in which I can accept this as a true statement, right? That's the only scenario in which literally millions of jobs are at risk. If your job can be replaced by a large language model, then you were getting paid for daycare. I'm sorry, but that's how it goes. I just don't understand this. Sure, it's going to help people, but this guy, this Citrini, folks, this is one of the authors here. He's the CIO.
And so that's kind of the underlying thesis here, is that there's going to be significant replacement of jobs with AI, specifically AI agents. Those things only really came into fruition in the last few months. And so as it comes through and shows up in the productivity of different corporations, that's when things are going to get a little more interesting and where we got to pay real attention.
All vague, all hypothetical, could be, maybe. That's why the sell-off has happened, right? But it's these vagaries and this uncertainty that is just exhausting. It's, the tariffs are off. The tariffs are back on. Now it's 10%. Nope, it's going to be 15%. China's going to fight it again. We're going to fight it all over again. This on and off crap with the tariffs, or this on and off crap with every PR announcement from any AI company, or even a dude who goes on social media and tells people that something big is happening, but they don't realize it yet, can actually move the largest financial market in the world right now. A viral post on Twitter can move the entire financial market. Or Anthropic releasing a PR that their tool does something that they say that can do, can devastate one of the oldest tech companies in the world in one day. So that's one reason why you don't need any kind of weird price suppression or price manipulation to have the Bitcoin price down again, because that's literally the environment in which it has to survive right now. Now, two things can be true at the same time. There can be natural market forces that we might not like that are suppressing the Bitcoin price. Last week, I floated the idea, others have as well, that perhaps all of the excitement around digital asset treasury companies like Strategy and others may have diverted retail from Bitcoin into these stocks. And the case seems kind of solid, if you ask me. They could just open up their Robinhood or whatever their app is that they use to buy stocks. They don't have to have a weird Coinbase account or anything like that was weird and skeevy. They can just use the app they already have. They can use the damn Cash App if they want. And they essentially get exposure to the Bitcoin price action. And if they're doing that, they probably never bought into the Bitcoin thesis to begin with. So it seemed possible that digital asset companies like Strategy could have diverted retail attention from Bitcoin into Bitcoin derivative products. Sure, okay, that's one theory. Natalie Brunell sat down with Saylor on Coin Stories this week. I'll link it in the show notes. And he suggested perhaps something else is pushing the price of Bitcoin down. And it ain't digital asset treasury companies, of course, he would say, since he has the largest. And it's not necessarily a shadow group that are meeting in a secret Signal chat to front-run the market, but something much more ordinary and much more common and much more disappointing. And that is rehypothecated Bitcoin.
Now, there's a third place you can get credit. And the third place is you go to a crypto exchange or an OTC exchange, and they'll oftentimes give you a loan at 4% or 3% or 5% or 2%. I've had people offer me Bitcoin back credit at 1% or 0%. What's the catch, Natalie?
Right. That's the question.
There's always the catch is they want me to transfer the Bitcoin to them so they can rehypothecate it.
Right.
So if you have $10 million, you either cannot get a loan from a legitimate bank, or you can get a small loan at a 10% interest rate, or you can get a 3 or 4% loan, but then it gets rehypothecated. So your $10 million of Bitcoin gets sold once, gets sold twice, gets sold 3 times. You might actually create $30 or $40 million worth of selling because the Bitcoin that you posted that you transferred to the shadow bank or the crypto exchange rehypothecated it 3 times. Okay, so what's holding down the price? I think what holds down the price of the asset is the lack of a fully formed, non-rehypothecating credit system, right? And there's a limit to how much you can rehypothecate certain other assets, right? When you post your home as collateral for a mortgage, the bank doesn't turn around and sell the house on your street 10 times. If they did, the price of houses on your street would be lower, right? Mm-hmm. So I think that the lack of a fully formed banking system holds the price back. The existence of rehypothecation in the crypto economy damps the vol. It works to both sides, right? When people want to get short, they might get short 50x leverage. When they want to get long, they might get long 50x leverage. So right now we're in that bear market where you've got the rehypothecation holding back the price. And I think at some point it reverses itself. We'll just have to wait.
The reason why I play this clip is because the theme of this episode could be kind of probably summed up pretty simply. There can be things that pull and hold the price down that we might hate to see that are actual just natural functions of the market mixed with supply and demand dynamics. And of course, secret Signal chats. But you know what I mean, right? If the supply side dynamics are such that there's not enough people buying the supply, then these things have a dampening suppressive effect. If there are more buyers than the market can accommodate, these things don't tend to really have much of a suppressive effect. And we don't seem to really dig around looking for price suppression. It'd be nice, and I think what Saylor's saying is if there was a more formal structure, different types of loan products, perhaps one that Strike could offer, Strategy could offer, who knows? Although I do have some Strike news coming up for you. But I think that's where Saylor sees things going, is if you have a more robust banking system, then perhaps you reduce the rehypothecation, where when you go and you put your Bitcoin on a lender, they're lending it out on the back end. And it's always worth checking to see if your lender does that or not. And he says it's rehypothecation. But I say, what say you? I want to get this down because I feel like this AI stuff is stupid and getting out of hand. There's so much noise that we need to create a little signal here. So I want you to boost into the show. Is AI impacting your job right now? Your job. And be honest, is AI actually changing your job today? Or is it hype? Is it not even hitting your workplace? I want to compare what you're saying to what all the media reports are saying and see what our community is seeing in the real world. Is AI impacting your job right now? If so, how? Or not at all? Boost in and tell me, let's just get this done with, because I'm not sure where reality really is anymore with this topic. So boost in and tell me if it's impacting you right now, and I will read that on the next episode. Well, you can support the show just by doing what you do. If you want to buy Sats on River, one of the best places in the U.S., use the link in the show notes. If you're all about self-custody and you want to go to and from your own wallets where it's never on their system, that's the Bitcoin Well. They're available in the U.S. and Canada. The Bitcoin company goes from Sats to gift card in just seconds. Probably going to be using that on the road trip soon. The Fold card lets you stack Sats while you're paying bills and buying stuff day to day. And then Salt Lending, they let you get access to your Bitcoin value without having to sell it. Links to all of those are in the show notes. You use those if you want to get started. You support the show just by doing what you're doing. Of course, we've also got the membership and the boosts, and a lot more show coming up.
And now it is time for Le Boost.
Oh, let's do it. The fun shall now commence.
Fun will now commence.
Let's get into our first boost. Lee came in with a row of McDucks. That's 22,222 sats.
Things are looking up for old McDuck.
Says, I'd be interested to hear your thoughts around the Q2 to quarter 2 2026 timeframe for Bitcoin awareness, adoption, and USD price. Several big events are coming. You've got taxes getting paid, returns to the plebs, the worst confirmation hearings, and maybe a Fed pump. The election campaign's in full swing, and maybe Altio being replaced. Maybe a little market clarity as well. There's so much going on. Keep up the fire, brother. So here's what I think, and that's a good question. I think your time frames are right in what is landing news-wise, but probably not right in terms of money-wise, is my estimation. The net effect is asset owners often still end up paying their Bitcoin or selling their Bitcoin to help pay their taxes. Maybe different this year. I'd like to see that change, especially with the strike product I'm about to talk about. But that does tend to be an issue around tax time, as Bitcoin has tended to be a little soft because they're cashing out of a scarce digital asset of generational wealth so that way they can pay their yearly tax bill. And it sucks, man. It sucks real bad. As far as the Fed stuff, I think that's more likely to cause volatility at first than it is PAMP. And the first rate decision isn't, I believe, until a month after he's been in there. However, that said, if Wirsh were to get out ahead of that and start talking very dovish and start signaling to the market what he intends to do, I think that would dampen the volatility. However, I think that'd probably be looked at as stepping on JPOW and considered, probably uncouth, but I'm not sure. Also, clarity. I think we'll know by April. I wish clarity didn't have an impact on Bitcoin. It really pisses me off that it does because the bill itself really has nothing to do with Bitcoin. But for the investment class, they're waiting on that. And I think that will be a beginning of an unrolling of funding. I don't think it'll be like a floodgate. That's just from my experience. That's just my gut feeling there. Thanks, Lee. Appreciate that McBoost.
This old duck still got it.
And thanks for supporting the show. User 303 came in with 21,420 sats. Now, user, if you want to update your name in your profile and come back in with a boost to tell me who you are, totally love that. You don't even have to do the above 2,000 if you don't want.
Rock and roll.
Hi, Chris. On your last episode, you mentioned being open to attending a Bitcoin meetup if it's relatively close. So I want to invite you to Bitcoin is for Everyone in Portland, Oregon. It's on May 22nd to the 23rd. I'm a volunteer at the event, which features workshops on day 1 and a main stage with talks on day 2. Tickets are available at bitcoinisforeveryone.com with an early bird special until February 28th, plus a 21% discount with the code NOSTERINSIDER. I'd love to see you there. Hey, this is really cool. Man, I think I could try to make that work. I have to see if I can link it in with my plans to go to Texas, which maybe I can. I'm not sure. And depending on when Red Hat Summit is, I might be able to make that work, user 30. Thank you for boosting that in. Bitcoin for everyone, bitcoinisforeveryone.com. And again, the early bird special to get 21% discount is Noster Insider. That's pretty cool. May 22nd to the 23rd. Thank you for boosting that in. Blanket invitation to anybody. Let me know about Bitcoin events. Use this space to promote your event. I think that's a great little exchange of value. OB's here with 21,420 sats. Thanks Thanks for the BIP 110 rundown. It's funny. The bankless guys are responsible for me selling my ETH and going Bitcoin only. I was trying to understand the industry, and their promotions of garbage taught me a valuable lesson. Taught me a valuable lesson, too, watching from afar. Don't ever do that. Thanks, OB. Appreciate the boost. Maris February comes in with 21,021 sats. Oh, I think he's going for it. There you go. Agree with your take on BIP 110. Enjoy the compilation of clips. And, I enjoy them. And I particularly enjoy your comments. Well, thank you. I am here to serve, and I hope you do enjoy.
You're doing very well.
Muy Frio comes in with 12,000 sats. That's okay. Oh, across 2 boosts. All right. I got you. And cheap food and Doritos and Coke decreasing in prices seem to be evidence of government subsidizing illegal benefits were causing prices to go up. Interesting observation. Thank you very much, Muro. Appreciate that. One Dull Geeks here with 10,110 sats.
It's over 9,000!
I am running BIP 110, and you made an argument against it that made me reconsider. The argument was that BIP 110 changes Bitcoin because it allows the minority to force their opinion on the majority. After thinking about it, I don't come to the same conclusion. I don't think BIP 110 changes anything with respect to this risk, and opposing BIP 110 doesn't mitigate that risk. This is a feature of the Nakamoto consensus that exists today. Okay, so your message got cut off at part here, but I'm curious what you mean if, say, 10 to 12% of the hash rate's only required to enforce the fork. I'm curious, if you wouldn't mind following up on that one, Dull Geek. I like that line of conversation. It's at least it's an alternative opinion that I appreciate somebody being willing to send in. So I'd love to hear follow-up on that. Thank you very much. Nakamoto 6102 is here with 3,500 cents. The majority of money will not leave banks for 3% yield on stablecoins. Wouldn't they just be giving up FDIC insurance too? I don't think 3% is worth that risk. Thanks for the value. Nakamoto, right there with you, brother. I mean, especially, I don't know. Yeah. Unless they can have FDIC insurance, I don't think a lot of typical consumers are going to want to move. Especially for what is essentially a tech company that could have a run on the bank. Very possibly, right? It's like the very thing FDIC insurance is there to protect for. That's a great point. Thank you for the boost. I appreciate that.
You make me want to be a better man.
Sloppy Joe's here with 4,600 sats.
Reporting in.
I always thought people in the Bitcoin space were really interesting because to really understand it, you need adequate knowledge of economics, history, game theory, computer science, and networking. So, Chris, can you tell us a bit about your background? I'm guessing you're a software engineer by trade, but you have a solid grasp on macroeconomics too. How did you get to where you are? Not a software engineer per se, but I guess I would call myself a systems engineer. For sure. I spent over 10 years heads down working very, very hard in the tech industry and kind of getting a fundamental understanding of all of that. And then after the 2008 financial collapse, I almost lost everything, and it was rough because of a house situation I was in the middle of where we were attempting to sell the studio that I'm sitting in right now, which, by the way, we didn't sell, spoiler, and building a new home. And the credit market was collapsing. And it became really, really scary there for a little bit. And I realized at that moment that my blissful ignorance had cost me greatly. And that if I had been paying even just a little bit of attention to the news and the macroeconomic news, I would have realized what was going on in the mortgage market and would not have put myself in that position. But I hadn't been. I had just decided to not pay attention to that because I had plenty of things to care about. And I realized that that isn't how it works, especially when it comes to protecting your future and your investments. And then, Bitcoin is a fantastic teacher. Through the lens of Bitcoin, you learn so much. I don't know if I ever could have understood the money creation process in the United States if I didn't have something to view it from outside the system with. And Bitcoin gave me that lens to understand, to look back at the thing that I'd always existed in and actually understand for the first time how it operates. And once I understood how the financial system operates and how the markets work, so much of what goes on in our day-to-day life started to make sense. So much of what people contribute to wild, smoke-room-filled conspiracies can actually be attributed to market dynamics and pressures and the macroeconomic situation. And it is the unlock to understanding what is really going on It's so many aspects of our day-to-day lives and the incentives and things that motivate the Congress critters and even our local politicians, and I mean all around the world. And once I understood that unlock, it became a passion of mine to follow it pretty heavily. Then I had the opportunity to meet the Bitcoin dad, who is an economic genius, and I learned a bunch from him and was able to view the world through his lens and continue to study Bitcoin more and just appreciate it more as a macroeconomic instrument. And that's really when my passion for Bitcoin went from it's a cool technology and I really like the distributed P2P network, which is originally what got me into Bitcoin, was mining and the network and the way, just the technical aspects of Bitcoin and just the elegant simplicity and beauty of the white paper. And then after that, that sustained me for many years, but my interest faded because it was a technology and a lot of other altcoins came out and it just got really frustrating. But then when I began to understand macroeconomics again later on and then re-picked up Bitcoin, many years ago from that perspective, well, it just became, to me, obvious math where this one's going. And then it's just a matter of how much patience do I have to write it out. And I don't know if I really got on a tangent there, Sloppy Joe. I hope I answered your question.
10 Goldblums out of a possible 10 Goldblums.
But there you go. I hope that helps a little bit. And if I didn't, feel free to send a follow-up. PJ's here with 4,444 sats. Great show as always, but I have an ask. Could you add your questions to the audience to the show notes? By the time I boost, the show's over, and by the time I want to boost, the show's over, and I've forgotten. Oh, and he also sent a row of ducks to our song artist. Thank you, PJ. That's great. That's a good question. I hadn't thought about that. It's really now it's a process of me trying to remember after the show. Who remembers first? I will try to remember to add that to the show notes. Not a big deal at all, actually. It's more of, I've been doing this for 94 episodes, and now I have a habit of how I do the show notes. But I will try to remember. I like that idea because I would like more people to boost in and answer, especially this week's question. I deeply want people to answer this week's question. Is AI impacting your job? Yes, no, how? Please help me understand what's going on out there. And I will try to remember to put that in the show notes. Thank you, PJ. It's always good to hear from you. I hope to see you very soon on the way down to scale. Hodl Hall is coming in with 12,345 sats. That's a Spaceballs boost.
So the combination is 1, 2, 3, 4, 5.
Yes, that's amazing. I've got the same combination on my luggage.
Great show as always. I think you should start using a soundbite from Fleetwood Mac's The Chain whenever you play a highly regarded clip from Mr. Wonderful. I enjoy laughing at his far left curve takes, and it's a great song. It might help these institutions learn that you would never break the chain. Oh, never break the chain. I got you. Yeah, I got you. Of course, it's going to get me in trouble. I'm not allowed to play that. So I like the idea, but we'll have to come up with maybe a karaoke version or something. Thanks, Hadala. Appreciate the Spaceballs boost.
The hell was that? Spaceball 1. They've gone to plaid.
All right, we got Gene Bean. He's back with 2,267 sats.
Oh my God, this drawer is filled with Fruit Loops.
The BIP 110 stuff makes me sick, and it's why I returned to core a while back. Here's a question. Where are Jack Mallers, Jack Dorsey, and Michael Saylor on this? Can they not help counter this stupidity with their reach and influence? What about other treasury companies? Don't they have a vested interest? Don't they have big microphones? Good questions, Gene. So we did see Saylor kind of address it in his interview with Natalie Brunell. He talked about it a little bit more broadly about people that are all gung-ho to make these changes. But it seemed pretty clear he was talking about some of this. I think the better question, I would love to hear Jack's opinion on it, but I don't know how much of this, although Jack's company gets screwed. If BIP 110 were actually going full effect and we had the fork, Lightning would just be so wrecked. So many Lightning transactions would get rugged. So it would probably really screw up Strike's business. But the one I would like to hear from is Jack Dorsey, because he's funded Ocean. And Ocean, unfortunately, who I have had a lot of respect for until this, would be some of the top beneficiaries from this. Luke, Dasher, and Mechanic, they work for Ocean. And where do you think the mining centralization, where do you think they're going to get enough mining hash power to actually implement this? It's going to be from Ocean. There's no coincidence here. And then who runs knots? Oh, right, it's Luke. So knots is the way they enforce BIP 110 and implement it, and Ocean will be the way they have the hash power. And in both scenarios, you essentially end up with Luke running the Bitcoin network now. Huh. Wonder how that works. So yeah, I would love to hear Dorsey's take on that because he's funding this. So be good to hear what he has to think about it. And I would love to hear a few more people come out because the people that do come out have been brutally attacked. Brutally attacked. Why do you hate Bitcoin? Why do you like child pornography? And then also criticized for not technically understanding what's going on, which is particularly ironic. So it's, yeah. I hope they do, Gene. And I think maybe as September approaches, a few more folks might wake up. Good question. It's always good to hear from you, too. Wish we were going to see it scale. Ace Ackerman's here with a row of ducks. BIP 110 is unnecessary and could lead to censorship. Yep. Agreed. The market should be allowed to determine what Bitcoin is best and suitable for which is a store of value and money. Crater has gone off the deep end. Stop running knots as well. You did, huh? Well, the market already has, Ace. It's clear in the Core 30 adoption. It's clear in the prediction markets. It's clear by the miners. None of them are doing any of it. So the market has already decided. So that's why it's extremely clever that they've come up with a way where they don't really need the market. They just need part of the market. And you can always find a few radicals. Or you can always scare people with talks of child porn and find people that want to cover their own ass and have a lawyer breathing down their neck. So I think that's the strategy, Ace. And I don't like it. My opinion, though. Kiwi Bitcoin Guide comes in. He's back 6,543 sats.
Well, let's hear it, good buddy.
Bear market getting you down? BIP 110 doing your head in? Well, here's just what you need. All of you. A Bitcoin meetup in New Zealand. We run these really relaxed and friendly meetups. We call them Bitkiwikis. Bitkiwikis. 3 times a year, all the Bitcoiners are welcome. We often have overseas Bitcoiners come along too. The next one's real soon. We'll let you off, Chris, because I know you're at Planet Nix, but maybe next time. Everyone is welcome. Check out KiwiBitcoinGuide.org, and they've got the BitKiwi meetups in there. The BitKiwi, of course. So check out KiwiBitcoinGuide.org. Thank you, Kiwi Bitcoin Guide. That's a great heads up. 2 really awesome Bitcoin meetups. I'm glad I brought that conversation up. Boy, oh boy, I need a database of these. I need like an overlay when I'm route planning or going on a trip, and I just plug in my destination, and it just tells me all the Bitcoin meetups around. Could somebody make that tool? You know, like a route planner that puts Bitcoin meetups on there? Appreciate it, Kiwi. Massey0135. MSC? Probably MSC. Came in with 4,096 sats.
This is a tasty burger.
Do you think it's reasonable to use Bitcoin as a more long-term savings account? Like the things maybe for 5 years to longer in the future? I'm a college student and currently every time I put money in savings, I put half of it in a standard savings account, stable with very little interest, and half into Bitcoin. I use the short-term savings account for things like new toys or a computer part or other big purchases that might be coming up in a few months. Yeah, that makes sense, right? He says even something may be coming up in a year or two. And then in case I suddenly need money. And then and then more Bitcoin gets stored, but that got cut off. Ah, man, another one got cut off. But I get your jest. You're saying that you save half your money in fiat and half your money in Bitcoin, and you're asking if that seems smart? Yeah, I think especially at your age too. It's really smart. You know, when you get to my age and you want to stack more, you start thinking, boy, can I just put everything in Bitcoin? What can I do? But at your age, I think one of the biggest mistakes you could make is actually going too all in. And the reason why I say that is if you go too deep, you get tapped out. And when you're tapped out, your only option is to sell your Bitcoin. There are other products. We're going to talk about that in a little bit, but that's something you need to be aware of. Bitcoiners tend to be so passionate that they go so deeply in that they kind of run out of dry powder. And when a life event comes up, they sometimes have to sell off. And if you can avoid that by having a little bit of a, piggy bank there, if you're thinking 1-2 years, I really like your time preference too, dude. If you're thinking 2 years is short term, I think you're really in the sweet spot. And for your Bitcoin, I think 5 years is a really, really reasonable spot. And for some reason, in my head, I've just been kind of mentally saying, don't even think about that stack until 2031, 2032 for some reason. That's just where I'm at. I don't know if that's where it'll stay, But that's how I think about it mentally. It's like, dude, don't even think about the stack that much until 2030, right? And just let it sit, because you look at all this panic we're seeing in the market. Is AI going to take this job? Is this industry about to be devastated? Bitcoin doesn't care about any of that. None of that changes the Bitcoin fundamentals. And it's truly one of the genuine benefits is you can just stack sats and not pay attention and let it go to work over time. You don't have to worry about what the CEO is doing. You don't have to worry about the quarterly report for NVIDIA taking out a stock that's nearby, like collateral damage on the stock market because NVIDIA had a bad day. I mean, you do in the short term. But the fundamental thesis doesn't change. And so in the long term, it plays out. And so while maybe some companies come and go, this one's the leader today, that one's the leader today, oh, this one's gone bust, this one's been acquired, none of that matters in Bitcoin. And so it's the type of money that I like to just think about way off in the future. I keep a little hot stash just because I like to dabble in the community, because I've been doing this forever, like 16 years. So I've built up routines and I like to dabble in the economy. But I think you're doing a really good job. Thank you. Appreciate the boost too. Bobby Pins here with 10,000 sats. Woo!
Yeah, I got answers and I want some questions.
I'm still running knots, but I'm deliberately not signaling for BIP 110. I also have a BitX solo mining with the Datum Gateway, but won't be moving a large amount of my hash rate to Ocean, at least until all of this settles down. If spam is as much of an issue as Luke and Mechanic state, why does the majority of the network not agree with them? Either fix the spam issue permanently or let it be. A temporary soft fork is just unnecessary way for them to feel like they got a win after they lost the node war. I think that's what you said because I got cut off. I completely agree too, is they pivoted to this after they were unsuccessful at campaigning core to change version 30. This just sort of feels like, well, we built a movement and now we need cope. And so we're going to take over Bitcoin with this with this momentum. But something you said there, it struck me. And it seems to me this argument would be a lot stronger if we had more than 1 sat per VByte right now for a transaction fee. If we were looking at real money, if we were looking at real expenses to transact on the Bitcoin network, I think they'd maybe have a stronger argument. But the spam isn't a problem. In fact, pretty much everybody that is using quote unquote spam, if you even want to call it that, some of it seems like spam to me, but whatever. They're still doing it the old way, the pre-version 30 way. And it would make sense because a lot of the majority of the nodes are still pre-version 30. So literally nothing has changed and nothing would change. There you go. Genius came in with a row of ducks. Thank you for the boost, though. Appreciate it. Boost. Well, boost to you, and you wrap us up. Thank you very much, sir. Appreciate that. In fact, thank you everybody who supported the show either through a Jupiter.party membership, a Fountain.fm membership, which after the travel season, you'll see some life there, or those of you who boosted. We really do appreciate it. And it's no advertiser. It's just me sitting here doing the show with you. It's a tight little community. It's a value for value circle. And we had some of you, 41 actually, that's not a bad number at all, stream sats as you listened. Collectively, you sat streamers had the largest boost, 85,905 sats. When you combine that with those of you who sent a message, our grand total for episode 94 is 278,152 sats. Now, just a little PSA. I'm going to be on the road for 2 weeks. I don't really know what the recording schedule is or what the release schedule will be or if there will be episodes. But if by the force of the road and nature I can get to an Airbnb and find a spot to record, I hope to sit down with Mr. Wes Payne and do a node special. We'll see. I don't know if it's the full node episode we want to do, but we do have a lot on our minds right now when it comes to Bitcoin nodes and what we're doing these days differently than even just 5 months ago. So I hope we have an opportunity to do that. It's not locked in, but if you have node questions, one way to motivate us to really make it happen would be a bunch of boosts coming in. You know what I mean? Like, hey man, if we got a bunch of boosts, we got to sit down and work. You know what I'm saying? We got a job to do. But don't be worried if you don't see me coming out on the regular time and day. It's going to be a little in flex. Let's just say that. And of course, meetup.com/Jupiter Broadcasting, if you're going to be in the Pasadena area, say March 5th to like the 7th, meetup.com/Jupiter Broadcasting. Love to see you there. I think it's going to be a great event, and I am looking forward to nice weather and an open road. Let me tell you, work has been rough and a lot when you're looking forward to 11 and 12-hour drive days as a relief. You know what I'm talking about, right? Here's one that hits me right in the feels even 12 years later. 12 years ago today, Mt. Gox collapsed. 850,000 Bitcoin were initially lost. Not too long afterwards, they recovered around 200,000, but there we were. It was early February 2014, and Mt. Gox users noticed that tens of thousands of Bitcoin were stuck as bad transactions. And the only way we knew this was you could query it via the Mt. Gox public API. And there were websites that were monitoring this because Mt. Gox was the exchange for Bitcoin. They were extremely critical to the entire economy. And withdrawals on February, I guess that would be 25th, were paused. And this actually began, now that I'm thinking about it, it was a multi-day process. I'm now replaying it a little bit, and it initially started earlier, and people are asking Mt. Gox what was going on, and they started giving us bullcrap answers that didn't technically check out. And this was pre-SigWit era, so they were trying to make some claims that were maybe technically possible, but anybody that really understood what was going on knew they were full of crap. And so over on the Bitcoin talk forums, we started to panic because the explanation didn't make any sense. And so we knew something was bad, and trust got flushed really fast. And it started to get bad. And Mt. Gox came into the Bitcoin talk forum and started making statements and trying to assure us everything was just fine. Inevitably, we discovered that the Bitcoin was lost. And as soon as the BS technical explanations came out, my heart started to sink. I had a lot of Bitcoin. I had a lot of Bitcoin on the exchange, and because it was really one of the ways to transact. And, oh man, it was rough. It still sucks today. And I was so devastated at the time. I mean, I literally mourned the loss because I'd lost Bitcoin before that, about the same amount actually, and I didn't understand and appreciate that it was valuable at the time. Because I was just interested in mining. I wasn't even really interested in the Bitcoin it was producing. It was fun to be able to buy stuff with it on Newegg or whatever, but actually that time you couldn't even do that. You couldn't do much with it. And so I didn't really mourn the loss of my initial batch of Bitcoin when an online wallet got hacked that I was reviewing for TechSnap. But by the time I think I lost my Mt. Gox money, I think I knew what I was losing, and that hurt. And I mourned the loss. I didn't even want to engage in the legal process. I didn't even want to interface with it. Now, some people did get their money back. In fact, some people are still getting their money back today. In frickin' 2026, the payments are still happening. This thing went down 12 years ago, which I think tells you how long this process can drag on. But it's just so funny that here we are 12 years later, and it still feels like, I don't know, nothing's changed in a way. Like we had FTX happen, we had the Terra Luna stuff happen, now we see the Jane Street shenanigans. It's not an equivalent, it's not the same. But there's always some idiot out there that's screwing stuff up. And that's why, the key takeaway from all of this is you got to at least self-custody some of your stack. Or do it in a way where you're really, really sure that if somebody else is watching it for you, that they're not going to get taken out by some sort of collateral risk, by some sort of third-party counterparty risk that maybe you didn't know about. You didn't even know they're affiliated with that kind of company. That's how this space works, is when one company goes, it's a blast radius. And so self-custody is your insurance policy against that. Now, every setup is unique and everybody has their own individual requirements. So if you can't do self-custody, it's just something you have to really take very seriously. And I'm not saying even you need to self-custody everything. I think the more you can, the better. But there may be a reason why maybe you want to set a little bit of your stash aside. And that's because the Strike line of credit appears to be very close. Strike has been working on this for a bit. It's an open-term loan with no origination fee and no repayment fee. And you only accrue interest for what you're actually using. Now, no affiliation here, no particular interest in this outside of, I think this is a compelling product idea. I think you should think about this from a Bitcoin miner standpoint, or you should think about it from a large expense comes up that you would have had to maybe put on a credit card that you could now charge against a line of credit. And Jack explained some of the use cases in a recent episode of his podcast.
Right now, the only credit product in Bitcoin are these 12-month loans, okay, which are fine, and they serve their purpose. If you have a large tax bill, I had one of those, and I got a 12-month loan on Strike. If you are getting married, you need to finance a wedding, you're buying a new house, you're starting a new business, you take out a large chunk of capital, you lock in the term for 12 months, so it's not a variable rate or anything, and you deploy that capital, you're able to plan ahead. You're going to say, hey, I want to finance my wedding collateralized by Bitcoin. I'm going to pay it back over this duration because I'm calculating my salary and I'm calculating what my bonus is going to be. And that works. But what it doesn't really do is it's not the best way to live on Bitcoin. The dream for me is I get my paycheck, I convert it into Bitcoin. I am able to live on Bitcoin without selling it and pay my bills. And so what the line of credit is instead of taking out a large lump sum of capital at once and needing to use it for 12 months, you are just drawing the capital that you need when you need it. So let me give you guys a concrete example. Let's say I'm keeping 10 to 20% of my Bitcoin stack on Strike, and I wanted to live on that by borrowing against a little bit of it. But if I do 50% LTV loan, and then Bitcoin goes through a bear market like it is, and I got to go post more collateral, I risk a margin call, I'm borrowing a large lump sum of cash all at once. And that's what ends up stressing people out and getting people in trouble is they're like, well, what if the price goes down? There's going to be a margin call. There's a chance I'm going to get liquidated. It really makes me lose sleep. Doing math, I'm doing numbers. I feel uncomfortable.
The other thing he's not really saying here, probably because it's particularly bad on Strike, a lot of these Bitcoin-backed loans that you get that have like a 12-month term, they have minimums that are pretty high in some states, $10,000, $15,000. And outside the United States, they can be even significantly higher than that. Salt, I think, is $5,000. But okay, let's just use this. Let's go with $5,000. I think Strike's $10,000 minimum loan in Washington, I think is, I'm not sure, but I think that's what it is. Last time I looked it up, which was towards the end of last year, it looked like it was a $10,000 minimum loan in Washington state. Depends on the state. And I believe Salt was $5,000. But let's say you needed to get a new transmission and you only needed $2,000 or $3,000. Well, you have to, if you wanted to get access to that via your Bitcoin liquidity, you have to take out a $5,000 loan. And now your loan is at $5,000. That means you have to have an LTV ratio that supports $5,000 during a bear market instead of just the $2,000 or $3,000 that you're actually using. So the Strike line of credit, you can get approved to whatever your Bitcoin is supporting. So if you've got, $20,000 of Bitcoin in your Strike account, then you could take out, in theory, a $10,000 line of credit. But they will only charge you, and you'll only have to cover the LTV for the actual amount of the line of credit you're using. So if you get a $10,000 line of credit, but you only use $2,000, you only have to cover that $2,000 with the LTV. I hope that makes sense because that's massive in terms of dynamic management there, and it is truly a unique product. It's not necessarily for everybody, but Bitcoin miners or, podcast shops that primarily are operating off of Bitcoin at this point, it's a pretty nice tool.
Price goes down, there's going to be a margin call, there's a chance I'm going to get liquidated. It really makes me lose sleep. Doing math, I'm doing numbers, I feel uncomfortable. And I understand that. I genuinely understand that, and I'm not trying to put anyone in that position. And so I came up with this idea for the line of credit because it actually suits my use case, my predominant use case. I do have large tax bills and one-off expenses every now and then, but my predominant use case is what I want is I have, like I said, let's say some small fraction of my Bitcoin stack on Strike, and I have bill pay hooked up on Strike, and the line of credit is just a payment method. So when a bill comes in that Strike is going to pay, because I have it all hooked up, Strike has an account and a routing number. When a bill comes in, I say, I want my line of credit to pay that bill. And so what Strike does is it borrows a little bit of credit against my stack of Bitcoin and pays the bill for me. So let's say I'm making numbers up. Let's say my credit card is $5,000 a month. My mortgage is $2,500 a month. And my ComEd bill is $50 a month, and my HOA is $100 a month. So I'm looking at around $8,000 of monthly expenses. Okay, let's say that. So Strike would pay those for me against my line of credit. So then at the end of the month, when I've paid all the bills, I don't have 50% LTV in this giant loan that I need to manage. And if Bitcoin's price goes down, I'm risk of margin call. I got to add more collateral. I'm sweating about liquidation. Instead, my LTV is like 1% because my LTV is only big as my monthly expenses. And I mean, hopefully you guys aren't spending 50% of your net worth every month, right?
So I think it is a particularly compelling product for some folks. I don't think you'd want to put your entire stack in any particular service, and it's probably not something everybody needs, but I hope they're successful with this. No word if he's going to put a credit card in front of it or something like that. Don't know if it's really necessary, to tell you the truth. But I can look back, around the Mt. Gox era, just think of a product like this that you have access to via an app on your phone. It's actually kind of mental that we're this far. This type of product, while not for everyone, is mental from an old-timer's perspective. And for somebody who's been stacking, through proof of work, it may one day be the thing that, keeps the business going on a lean month. Like it's been a lean month for the other shows that have advertising. It's been not a month. It's been a lean year that they don't have advertising on them. And so if a product like this was available, I could see JB leaning on that until a couple advertisers came on board for Linux Unplugged or something like that. And it's very, and you could see how that could apply to your personal life too. So I hope it's successful, because if it is, we'll see other competitors enter the market. I don't think Lava is a serious one at this time, unless they can prove they're doing it legally. And we'll see more and more options for consumers. All right, it's time for the final clip of the week, and I love these types of clips. There's been a bit of theme recently, I think. And I want to play Eric B. He's from Bloomberg. I think he's a great ETF analyst because he was calling the Bitcoin stuff early on. And truth be told, he was a Bitcoin skeptic initially. And over time, he began to change his mind. And I love it when these guys that are, pretty deep in the financial system, pretty deep into all of it, begin to have a new understanding through Bitcoin.
Two things about Bitcoin caught my interest before I cared. One is it just seemed to piss all the right people off. I shouldn't name names, but like someone like Paul Krugman, just the fact that he was so upset about it, I was like, something must be good about it. I like that he's upset about it, just being honest. Like if you're uptight, it just bothers you for some reason. And that's a good thing. The second thing is it came back from these basically near-death experiences over and over. There was multiple times where I was like, oh, okay, fine, it's gone now. And it came back and back. And then when you study other things that have come back from like 50% drawdowns multiple times, you realize it's all the best stocks on planet Earth. It's Amazon, it's Microsoft, it's Berkshire. Only stud things come back 3 or 4 times. And that's why I was like, I gave it respect.
Let's check in on the state of the network. I'm wrapping up a block height 938,342. One Bitcoin to the US dollar, $69,220 to get that one Bitcoin. That puts our sats per dollar at 1,445,000. Just 1,444,000, just a little bit fewer sats to get that dollar since last week's episode. Just a little bit. In fact, our 24-hour price change right now is sitting at 7.9% upwards adjustment. Over the last 7 days, we're up 4.8%. Not too shabby. That makes our 30-day price decline now at 20%, and our overall decline from the all-time high, 45.1%. There are 25,113 reachable nodes on the network right now. Not too bad. Wonder if we can get that to 25.5. I'm going to be on the road. You should be deploying nodes. Obviously. The Bitcoin network did adjust upwards in difficulty by 14%. 14.7%. That's a massive difficulty upwards adjustment. I guess the winter miners are getting back online now. It's good to see. Things are humming right along. Fee estimates are still really low. 1 sat to a V-byte right now. Great time to rebalance those lightning channels. The state of the network is strong. thisweekinbitcoin.show. That's the website. Get the show notes, the past episodes, the RSS feed, all of that over there. My goal is to create something here that doesn't get too distracted by the emotions around what's happening, but focuses on the signal. So you can plan for yourself, your family, your business, whatever it might be. So let me know how I did there with a boost. And don't forget meetup.com/Jupiter Broadcasting. While I'm gone, I'm going to be in Pasadena. I'd love to see you. It'll be one of a few events this year, so it's not the only event, but it is going to be one of the largest open source events in North America. So I'd love to see you there. And of course, if you're going to be at scale and use my promo code UNPLUG, that's UNPLG, you get like 40% off your registration. That's not too bad. That's not too bad. And if you miss me, go listen to a back episode. See how I did. Maybe clip it, send it in, if it's embarrassing or if it's good. And of course, as a reminder, I want you to boost. Is AI impacting your job right now, today? Or is it just not at all? I'd like to know. So boost in and tell me if it is, even in a small way, I guess. And then if you're seeing people get laid off and things like that, tell me about that. All right, we're going to get out of here, but I'm going to leave you with a value for value track. Justin Landtrip is just rocking it over on the Fountain FM charts. And today I am leaving you with his track, All's Well That Ends.
Their blackthorn swings through the night, search for you. Just a bait on platitude. Drove me to the field that day. The smell of oil in my glove told me I couldn't lose. The world it grew and grew, and love the only answer, and love an only night stole. Cascade of ideas we dance ceaselessly. Though progress couldn't kill you. Into the night without you. And love the only answer. And love an only night stole. I'll wait for a call to end. From a cascade of ideas we dance ceaselessly.